Well, despite what has been an epic rally for stocks, Wall Street's biggest bear says the gains are in for the year. Let's bring in Chris Harvey, head of equity strategy at Wells Fargo Securities. Welcome back, Chris. Good to see you. So what do? You sell and you go away and say thank you. See you next year.
No, you don't do that. And we don't think the gains are in for the year. What we think is we came in a little bit too cautious. We think fair value is about 2,900. We could go a little bit higher from here. But you do have to, what you were saying before, I think that's right. There has to be a rotation. What we're beginning to see is this reinflation trade. You want to start to shift back to value, to things that haven't worked. The financial, we just upgraded the financials a couple days ago. We think that works going forward. If you look at Germany, rates have gone from negative to positive. That's something they haven't done in a while. And China is coming back online. Trading tariff is going to happen shortly. So you want that cyclical exposure. You want those industrials. You want those cap good names. As far as technology, we were positive on semis. Now we're saying, hey, they're up 15% since we upgraded. It's time to take a breather, time to shift around, time to move the portfolio. But we still think there's opportunity in the marketplace.
If you think that things are not as bad in China and turning around, or not as bad in Europe and turning around, would you allocate to those countries as opposed to the U.S.?
And that's why we've been very positive on the cap goods space. We want exposure to that international trade. We were in China a couple weeks ago, and what clients and what investors are saying to us is the economy is a lot stronger than you think, and we started to see those economic numbers come out. And again, if we get trade and tariff done in another couple months, China's really back online.
I'm skating in BK's lane here, but U.S. dollar, you have this stealth rally in the dollar. Every time I turn around, headwind, U.S. dollar strength, headwind. Doesn't seem to be a headwind now. When does it become one?
That's a good question. I don't know the answer to that, but we've been able to mitigate through. Getting back to earnings season, what are we seeing? We're seeing that costs are now being mitigated. We are getting price, right? The economy is okay. As we get price, demand's not going away. And so we're able to mitigate a lot of these things. I can't tell you when the dollar starts to come back in, but if global economies start to firm up, you should start to see the dollar weaken at some point.
So in your analysis of this is the top-ish for the year, do you include the Fed being back in the picture at all?
No, I don't think the Fed gets back in the picture. I think the next move for the Fed is, I don't think the Fed does anything for the rest of the year. I think they're done at this point in time. They've done enough. It's time for them to move to the sidelines. I think they're okay being there. The economy's in good shape. Monetary policy, while I'm not happy the way we got here, is okay. We've reset things. And as we go forward, there's not that much speculation. What we heard from earnings season is we haven't re-risked. Investors really haven't re-risked at this point in time.
So, Chris, Dan said people are complacent. What worries you out there? What can derail this thing? I mean, are we just in a melt-up type of thing?
Well, first off, I wouldn't say people are complacent. People are still very concerned, and people just haven't re-risked. As I talk to clients, they don't have enough risk in their portfolio. What I would say is what worries me, what has worried me, what continues to worry me is the front end of the yield curve. The yield curve has flattened, right? We all know that. If the yield curve continues to flatten, then we have a problem because the issue is perception can become reality. I don't think that occurs, but that's the thing that worries me more than anything else.
When you say re-risk, do you just mean equity allocation?
Equity allocation, risk in the portfolio, right across leverage. We're not seeing a whole lot of leverage in the system at this point in time. And so really right across the board, we have not seen this big re-risking.
You sound like the highs or near highs are not in for the. I mean, if you're saying 2,900 or maybe a little more, we're 2,933 right now.
So our other risk is, as BK said before, you could see a melt up, right? So rates are low, credit spreads are tight, people haven't re-risked, China's coming back online, and sentiment has reset. That's a risk as well. So I'm not trying to play both sides of the fence, but we see issues, and I think you can see some upside. Things aren't bad out there.
You sound more bullish than neutral right now, Chris. Not really, seriously. It sounds like you're on the cusp of raising your price target, and you haven't announced it yet.
And then immediately saying it's too high.
All right, so just to button it up, your number one sector right now that you think people should be in?
Financials. So we just upgraded diversified financials, the broker dealers, asset managers, some of the credit card makers, some of the credit card companies, not makers.
Okay.
Thank you.
Chris, great to have you. Thank you.
Thank you.
Chris Harvey. All right. Where do we go from here, Dan?
I think it's still important to remember that whole laundry list of concerns in Q4 of, other than the Fed, not many of them have really abated. And we still have, $7, $8, $9, $10 trillion of sovereign debt that have negative yields. What does that tell you about the health of the global economy? We've had numerous global organizations lower global growth expectations for 2019. So, to me, I feel like we're back at these highs. Have a party, people. It's amazing. You know, we've done this now 3 times in 18 months. It's a great thing. But just remember, the last 2 times we were here, we had some very sharp sell-offs, and people make bad decisions after bad decision. Buying highs and selling lows.
So that's exactly the point. It doesn't have to be a binary event, right? It doesn't mean that you have to go all in at the highs or sell your entire portfolio. There's nothing wrong with doing what Karen does, sell some upside calls, take off a third or a quarter of your position, take off some of the names that actually have gone up 15, 20, 30%, like the semis. There's nothing wrong with taking a little off the table, maybe rotating any healthcare. I think that's the better move here. To me, what everybody's saying is that this is just a trickier market than it was when we were at the lows and the sentiment was horrible. It's just the deep end of the pool here.